Do you think you only have two choices with the IRS? Either pay in full or go broke? There are three paths to resolve your tax debt, and picking the wrong one can cost you thousands of dollars and months of your life. If you owe back taxes and don't know which option fits your situation, call Silver Tax Group at 855-900-1040 or visit us at silvertaxgroup.com for a confidential review. The wrong strategy is worse than no strategy at all. I'm Chad Silver, tax attorney and founder of Silver Tax Group. My firm has helped hundreds of clients navigate IRS collection, and the first question we always answer is which path actually fits. Today, I'm going to break down the three options the IRS gives you when you can't pay your tax debt: installment agreements, the offer in compromise, and currently not collectible status. I'll show you how each one works, who qualifies, what can go wrong, and how to pick the right one. Because choosing wrong doesn't just waste time, it can lock you into payments you can't afford or expose you to collection while you're waiting for an offer that never gets accepted. Option 1. Installment agreements. An installment agreement is exactly what it sounds like. You owe money, you can't pay it all at once. The IRS lets you pay it over time, monthly payments until the debt is gone. Here's who this works for. You owe under $50,000. You have steady income and can afford a monthly payment. You filed all your returns, and most importantly, you're not looking for a discount. You're looking for time. The IRS has tiers. If you owe under $10,000 and can pay within 3 years, the streamlined installment agreement is almost automatic. Under $25,000, you can usually set it up online with no financial disclosure. Over $25,000, the IRS wants to see a Form 433-F, your income, expenses, and assets. The catch: interest and penalties keep accruing while you're paying, so that $50,000 debt doesn't stay $50,000. And if you miss a payment, the IRS can terminate the agreement and go straight to enforced collection, bank levy, wage garnishment, the works. I had a client, we'll call him Robert. Robert owed $38,000 over 2 years of self-employment taxes. He had a stable job, no assets beyond his car, and just needed breathing room. We set up a 72-month installment agreement at about $528 a month. He's been paying for 3 years, hasn't missed a payment. The IRS leaves him alone. The bottom line: if you can afford to pay the full debt but just need time, the installment agreement is your path. It's the simplest, fastest, and hardest to screw up. Option 2. Offer in compromise. The offer in compromise is the one everyone asks about. Settle your tax debt for less than you owe. The IRS takes less because collecting the full amount would create economic hardship, or because there's genuine doubt about whether you actually owe that much. Here's who this actually works for. You have limited income and limited assets. Your reasonable collection potential, what the IRS can realistically get from you over the next 10 years, is less than what you owe. And you're willing to make either a lump sum payment or a short-term payment plan. Here's what most people get wrong. The IRS doesn't give discounts just because you don't want to pay. They run a formula. Income minus allowable expenses equals your monthly disposable income. Multiply that by 12 or 24 months, add the liquidation value of your assets. That's your offer floor. If your offer is below that number, the IRS says no. I'll give you a real example. We'll call her Teresa. Teresa owed $165,000 in back taxes from a failed business. She was now working a salaried job making about $62,000 a year. She had no house, no significant retirement account, and about $4,000 in the bank. We ran the numbers. Her reasonable collection potential came out to about $23,000. We submitted an offer in compromise for $24,000, slightly above the formula floor. The IRS accepted it. She paid $24,000 to settle $165,000 in debt. But here's the warning. The process takes 6 to 12 months. While your offer is pending, the IRS can continue collection activity in some cases, and the rejection rate is high. Most people miscalculate their offer or fail to disclose assets. The bottom line: the offer in compromise is powerful, but it's not a shortcut. You qualify by the math, not by how badly you want the discount. Option 3. Currently not collectible status. Currently not collectible CNC is the third option, and the one most people don't know exists. It means the IRS agrees you cannot pay anything right now. Not a negotiated discount, not a payment plan. Full stop on collection. Here's who this works for. Your income barely covers basic living expenses, and by basic, I mean the IRS's definition: rent or mortgage, utilities, food, transportation, health insurance, not your kid's private school, not your vacation fund. If after paying for necessities, you have nothing left, literally zero, the IRS may place your account in CNC status. What happens when you're in CNC? Collection stops. No bank levies, no wage garnishment, no asset seizure. The IRS can still file a notice of federal tax lien, which will hurt your credit. But for many people, that's a trade worth making. Here's what doesn't stop. Interest and penalties keep accruing. The debt doesn't go away. The IRS reviews your financial situation periodically. If your income increases, they can pull you out of CNC. The collection clock keeps ticking. The IRS generally has 10 years to collect. But if you're genuinely broke and the alternative is a levy that leaves you homeless, CNC buys you time. I had a client, we'll call him Daniel. Daniel was 67 years old, living on Social Security and a small pension. Total income about $28,000 a year. He owed $90,000 something in back taxes from a business he'd closed years ago. He had no assets, no house, no retirement beyond his monthly checks. We got him placed in CNC status. The IRS stopped all collection. Daniel's tax debt will likely expire before he ever has the ability to pay it. For him, that was the right answer. The bottom line, CNC is not a solution. It's a holding pattern. But for some people, it's the only option that keeps them afloat. How to choose the best option for you. So how do you know which path is yours? Here's a framework. First, can you afford to pay anything? If yes, and the debt is under $50,000, an installment agreement is usually the cleanest path. If no, you're looking at OIC or CNC. Second, what are your assets? If you have significant equity in a home, a retirement account, or other assets the IRS can reach, an offer in compromise gets harder because your reasonable collection potential goes up. CNC might be the better call while you wait out the collection statute. Third, what's your income trajectory? If you're temporarily broke but expect to earn more in a year or two, CNC buys you time. If you're stable but can't pay the full amount, the offer in compromise might be your best path. And fourth, what's the total debt? If you owe more than you could reasonably pay back in your lifetime, the offer in compromise is worth pursuing. If you owe an amount you could pay off over 6 or 7 years with some discipline, an installment agreement gets the IRS out of your life faster and with less drama. Here's the mistake I see most often. People who should be in an installment agreement file for an offer in compromise because they heard pennies on the dollar. They spend 6 months in paperwork, pay a non-refundable application fee, and get rejected because their reasonable collection potential exceeds their offer. Meanwhile, interest keeps running, and they've lost 6 months they could have spent actually paying down the debt. At Silver Tax Group, we don't guess which path fits you. We run your numbers using the IRS's own formulas: your reasonable collection potential, your allowable expenses, your asset exposure, and your collection statute timeline. We build your compliance strategy, we implement it, and we'll defend it if the IRS pushes back. If you owe back taxes and you're not sure whether an installment agreement, an offer in compromise, or CNC status is your best move, call us at 855-900-1040 or visit silvertaxgroup.com for a confidential review. Don't wait until the IRS comes knocking at your door, and don't pick the wrong strategy because you didn't know your options. I'm tax attorney Chad Silver. If you found this helpful, click like below, subscribe for more IRS defense and tax resolution content. Thanks for watching.